Welcome to ISE's ETF and Index Weekly Outlook, a weekly outlook on ETFs and ISE's indexes, hosted by Patrick Ceresna, the Chief Derivative Market Strategist at OptionSource.net. ISE has a portfolio of more than 20 proprietary indexes based on a diverse range of fast-growing industries and emerging markets. Our team of indexing experts is dedicated to creating these innovative indexes and partnering with issuers to launch unique investment vehicles. This includes exchange-traded funds, exchange-traded notes, and other structured products. ISE continually enhances its trading platform and develops new index products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE ETF and Index Outlook for October 8th, 2012. This is Patrick Ceresna. As always, we start with a chart of the S&P 500 using that spider exchange traded fund symbol SPY. The consolidation we saw in the markets from the prior week did find support above the 142 level and stayed actually at higher highs from all those highs we put in March and in August. At this juncture, with the market has tried to rally back up to those highs and is initially stalling along that overhead resistance along the 147.50 area. This here is going to be the first major test. The markets are overbought and are overdue for a corrective pattern, and as we approach these levels, if for whatever reason the market is not able to break them into new highs, then this could develop into a topping formation such as a double top, or if it temporarily breaks higher and then reverses, could be become a head and shoulders or any other type of variation. Ultimately, this is a very key level from which the bulls must prove that they're ready to take the markets to the next level, because if this is where the price action starts to stall, we may be seeing the swing high for this market move and a correction of even up to 50 to 100 S&P points maybe around the corner. Before we call that market correction, let's first give the bulls the benefit of the doubt and see whether or not they can actually push this market to a higher high. Next year, I want to take a look at the ISE Cloud Computing Index, which is a symbol CPQ, and we had a bullish breakout on that Cloud Computing Index to about the 225 level about a month ago. In fact, we were quite impressed with the way the price action was able to hold above that 220 focal point that we've been more or less highlighting. Really at this stage though, with that reversal back down and subsequently now the consolidations at or below this 218, 220 area, really at this point leaves room for there to be still corrective patterns that may see even 210 to 207 on the downside during these corrective phases. Whether there's a bigger picture correction coming in the cloud computing space will have a lot to do with what the broader market does. If we see broader technology selling such as S&P and NASDAQ consolidation, that would certainly leave room for the cloud computing to weaken even further than that. But so long as the market behaves, we shouldn't see too much more downside beyond a $3, $4, $5 swing on the downside. Next year, I want to take a look at the ISE Water Index, which is a symbol HHO. The Water Index has also finished a number of measured moves higher, while we've seen it very bullishly break to a higher high and actually consolidate above there. It is now attempted to break again yet to a higher high, pushing the 98 level. There is room for a few more days for a push up toward even the 99 to 100 level on the upside. But we'll be looking to see if there's any stalling price action at the top end of the channel moving higher as we approach those overhead levels. That's a place where we could naturally see overhead resistance, and then inevitably, just like what we might see in the S&P 500 on the broader market, we could see corrective patterns develop off of here. Finally, I want to take a look at the ISE Global Platinum Index, which is symbol ORE. And the Platinum Index, we were looking to see whether the support around the 70 level would be coming in. And disappointingly, this index has continued to distribute all the way back down to its previous lows near the 65 level. This demonstrates that that bullish breakout that we saw certainly was not attracting any follow-through buying. This distribution is not healthy, and while there is a reasonable probability that we're going to get a bounce off the support, unless the bulls can demonstrate some sort of ability to keep the markets up at these higher levels, if we can't see a bullish reversal, it may mean that there's yet another move lower coming in the platinum index. That was your ISE ETF and Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free ETF and index trade alerts, visit www.optionsource.net. To learn more about ISE's indexes and ETFs, visit us at www.ise.com/ETF.